let's continue on with that one and get the view of Pete McGuire from BAXTER-FX with me in studio. Pete, so David says, and welcome to you,
good morning,
that the continued fever for more stimulus ain't the best barometer to judge where gold goes next. Do you agree or disagree?
Well, it's a hard one to put some sort of context. A couple of quick things you need to think about, Carson. At the end of 08, early 09, till the middle of 2011, the US Fed pumped $2.3 trillion of debt into the market, in other words, quantitative easing, and the gold market rallied 70%. What's happening as far as what we saw overnight as far as Spain and then Italy and the next ones to drop across that whole segment or sector, I think you're going to see a continued slow rally to the upside. I really do think that you'll probably see 1700 to 1750 taken out over the next probably 8 to 10 weeks.
It's very interesting, though. You concede all the volatility that still remains in those markets would give a note of caution to that call, would it not, to say we're seeing a lot of liquidation of positions, necessarily so, to cover other losses.
Of course.
Gold doesn't remain immune from that one.
No, it doesn't, because people have only got so much cash. And it just depends on what goes on as far as margin calls. That's the great challenge, and many people out there are probably overcommitted across different asset classes. So I know that retail's holding back. They're worried about the volatility of the currency markets, and they're probably playing those at the present time.
That incredible stat of 70% rally since the start of money printing.
Yes.
Are you saying if you took money printing out of the equation, we could potentially see a pullback of as much as 70%? To return to a more fair value price?
Yeah, but
because we're at those sort of mid-80 peak levels now for gold.
Sure, but I really think that what you're seeing is just a continued cheap money, and we're going to see that play across Europe. I'm worried about where the US sits. We're in an election year. There are many factors playing into that whole conundrum at the moment, so I'm not suggesting you're going to see a massive correction to the downside. I just don't see it happening.
Roll with the cheap money whilst it lasts, and you say that could, I'm putting words in your mouth, but maybe another 18 months, 2 years before we see the Fed move higher.
Yeah, it could be that long, but we've got other economies that are severely underwater. Think about what's happening with Japan at the moment. They've got debt as far as, I'm just looking in here in the fin, 235% to GDP as far as public debt in Japan, so it's frightening, and they're talking about even trying to raise their consumption taxes as well. Well,
let's sort of whisk across the Kuril Islands and head over to Russia, because if you look at a link there with crude prices, big headache for Putin and everyone below him over where their budget sits relative to crude, which is only going one way, that's down.
Well, yeah, we've seen big 16 or 17% correction since the start of the year for WTI and Brent. WTI is sitting at about 83, Brent's 97.
There's about a $13 difference.
Yeah, about right. Yeah. And we've got a meeting tomorrow in Vienna for OPEC, remembering that the Saudis hold really the spigot. They can turn it on or off, and they're worried certainly about Iran at the moment. The sanctions are coming into play on the 28th of June.
Meaning
so already
what?
2 weeks away, as far as those sanctions imposed by the IEA and, of course, the US and Europe. So we're worried about what's going on with those 7 countries that have been given an opportunity to actually trade, but they've dropped their consumption of Iranian oil.
So it's not a case that necessarily the Saudis have to pump more if their consumptions decline?
Well, the Saudis can pump more to drive prices lower, which is going to affect certainly Iran, because they're very much reliant on export prices, of course, and that's what the sanctions are designed to do. And of course that will impact Russia, as you mentioned earlier.
If you look at the inventory levels, though, are you detecting even out of the US that there's been demand destruction, that the Saudis would need to do anything other than just keep things ticking over at these levels?
Yeah, as far as inventories, they're very, very strong at the moment, so there's no worries there.
Overflowing and cushion.
Yeah, well, that's right. The only thing you could that would hamper that would be possibly hurricanes moving into that, and we're moving into that season now. We don't see a huge amount of demand coming or increasing across the US, even though it is driving season this time of year. So prices at the moment are fairly weak.
What's your perception on the back of something going wrong in Spain now, worse than it already has, so yields may be going into the 7% zone and staying there? Does crude push towards 65? Ira Epstein from Lynn Group says get ready for it.
Yeah, that's a challenge. That's a reality. Possibly even as far as Italy playing into that as well. 65 could be a little bit low. But it's interesting what will happen with the US dollar as well. That's still sitting at about that 125 against the euro.
Because what does the Fed do? It looks at those cheaper prices and thinks, well, that's a boost for the economy. Why do we need to go in off the top of that with more stimulus? It's like push-pull. How do you come out the other side?
Well, that's right, and possibly, you know, the Saudis may be able to drive prices lower. What goes on tomorrow in Vienna is going to be interesting, that OPEC meeting. So I think it all pretty much hinges on that. We'll see some clear direction over the weeks ahead. Crude, if it goes under, say, $78 for WTI, I think then we've possibly 75 on our radar.
Are you surprised, or was it given that Hillary Clinton would be in front and centre at this point in time when it comes to the debate over Iran? Does the US flex its muscle now, or is it too distracted with elections?
That's a hard one to call. You know, the Secretary of State, she's worried certainly about Syria and what's going on there, and talking about Russian as far as helicopter gunships being sent over to Syria. I think that whole area, and then you've got Obama. We're not really sure what's happening, you know, as far as we're moving into the circus, ready to really kick into gear over the next probably 3 to 4 weeks, the elections. So, look, it's a hard one to call. I'm not very, very difficult as far as that geopolitical side.
Come back, talk geopolitics next week, because Greece will have decided.
Well, that's another one. Yeah,
exactly.
We're only a weekend away from that.
Stand by for it. Thanks. Look forward to you coming then.
Thank you, Carson.
Pete McGuire there from BAXTER-FX. Stick with us because we'll take a break, but coming up in just a few moments' time, Australian businesses and their online presence. What's going on in that space? We'll get to grips with it in just a tick.